What is up, everyone? Good morning, YouTube and traders. Hope everyone is doing well today. And today's Thursday, the day after the last Fed event of the year, the last rate hike of the year. And let's see what happened with Jerome Powell and the Fed. So naturally, we got the 50 basis point hike, right, compared to the 75 basis point hikes that we've been seeing in and out in the prior three or so meetings, I believe it was. And originally, we did get the drop. We got a sizable downturn, some upside, and then right now we are tracking a lot lower in the S&P 500. So widely expected, policy rate increases by 50 basis points to 425 to 450, right? It's a range yesterday as it downshifted from that 75 basis point hike in the previous four meetings. Sorry, it was four meetings, not three. And while that would appear to win investors over and seem like a more dovish and more bullish note, the so-called dot plot was more of a concern. That's what we have to take a look at, because the market is going to be forward thinking and we do have to analyze what the projections are for the future. So the Fed policymakers median projection now sees the federal funds rate range rising 5 to 5.1% next year, a level that has not been seen since 2007, compared with a 4.6% of the central bank's September projection. So not that long ago, 4.6% was the September projection, now 5.1. So there's a quote from Jerome Powell: "We need to be honest with ourselves that there's inflation. 12-month core inflation is 6% CPI. That's 3 times our 2% target. Now, it's good to see progress, but let's understand we have a long way to go to get back to price stability." So I don't think that anyone knows whether we're going to have a recession or not. And if we do, whether it's going to be a deep one or not, it's not knowledgeable. It's not knowable. Sorry. The historical, there's a lot of wind here. This is distracting me. The historical record cautions strongly against prematurely loosening policy, so we will stay on course till the job's done. Pretty much what happened here is Jerome Powell said, you know what? The target rate increases, inflation still super high. It took half a year to drop 2 percentage points. There's still a long way to go to that target. If you loosen prematurely, like we've seen before, a Fed pivot turns into a very, very deep cut in the overall market and the economy. So they're going to continue as expected to progress with the hikes, with the quantitative tightening, until there is more understanding of what's going on. Because a hike yesterday doesn't affect the market today and the overall economy today just like that, right? It's lagging. We need to see how this overall economy reacts to this, how mortgage reacts, how other loans react, how money supply reacts to this, right? And realistically, all three indices did slip, erasing gains from the earlier session, right? By the end of the day, the Nasdaq was down 0.8%, the S&P down 0.6, and the Dow down 0.4. So while more losses pretty much accumulated here overnight, we're coming into also a quad witch event tomorrow, which futures and options do expire on stocks and indices, and we'll see how that kind of reacts. Right, today we're going to see how money comes in or out of the market as we anticipate longer road ahead of us in terms of what's going on with the tightening here in the Fed. So that's something to caution for, right? Economically, I don't see this thing turning back up and us bottoming out right now and just rocketing higher. We're going to see Q1. Remember, we got the earnings. We got a lot of things to consider and a lot of job cuts to consider in big tech. So we'll see how the big tech companies deal with this, how other companies deal with this with increased rates, and more to come as we have planned here, what Jerome Powell said yesterday. So overall, let's see if we can hold some of this downside in today. There's a very, very prominent level here on the S&P. Before I talk more about that, let me just see what that level is. We're fairly close to it, right? It's gonna have to be the 39 15s 10s, right? We're not that far away from it, but that's a huge pivotal level. If we do manage to break through that into the end of the week, right, there's going to be a massive stop hunt to the downside. So in other news, we also have Tesla, right? Elon Musk is in the news again. A stock selling spree into yes, or I believe it was this week at some point, right? Sold another $3.6 billion of shares this week during a 3-day span, which helped Tesla hit the lowest level since 2020, right? Since late 2020. The stock is now down 60% year to date with a market cap below $500 billion mark as investors grow concern over Elon Musk's distraction from Tesla with his $44 billion acquisition of Twitter. For the last time, no further Tesla sales planned after today. Elon tweeted on April 28th, implying that that was the last financing needed to take over Twitter, and the billionaire made a similar pledge in August as he offloaded another 7.9 million shares worth around $6.9 billion, saying it was important to avoid an emergency sale of Tesla stock in the hopefully unlikely event that Twitter forces his deal to close and some equity partners don't come through. So, well, the deal closed in October, but Elon Musk sold another $4 billion worth of shares anyways in November, and he continues to sell by the billions. So I will make sure that Tesla shareholders benefit from Twitter long term. Musk tweeted overnight following his latest stock sale, but criticisms continue to grow about his guarantees and assurance. My commitment to free speech extends even not to banning the account following my plane, even though that is a direct personal safety risk. Musk promised a month ago only to pull the account on Wednesday as Twitter updated its private information policy. So don't forget that at the end of 2021, Musk cashed out about 15.8 million shares of Tesla worth about $16 billion to help pay a reported $11 billion tax bill after polling his followers. So Elon Musk is just losing confidence in his investors, always just saying something and doing the complete opposite. That's why Tesla has been down super aggressively day in and day out over the past few weeks right now. And yesterday we talked about looking for shorts on Tesla. I didn't want to miss out on that downside. It came, right? It was slow, but it came, and it was a pretty solid trade, not one of the better ones compared to what Tesla had been doing over the past few sessions before that. So with that being said, why don't we take a look at some of the levels today that we're going to be interested on the S&P. I have a huge pivotal level, 3988 to 3990. That's going to be a massive zone for us to consider because it's been playing a role for us for the past few weeks. And anything above that, you start to see some buy side above 3996, right? That's going to be a huge step for the buyers, and I think they're going to really take over that. But as it stands, 3969. A huge level that was recently traded where we got a very strong pop off that area, hold support, and that's going to be a very key area for us to watch this morning. And with that being said, I am looking for a little more downside as long as we can hold 3990. But remember, the 3969 is a massive zone where I'm going to be looking to see if any buyers do come in and sweep those lows yet again. So with that being said, we're in a limbo, downside still opening up. We'll see how that shapes up, and we'll see you guys tomorrow for the end of the week wrap up. So I hope you guys have a great trading day, and let's stay focused. Fewer trades to end the week. Tomorrow, maybe 1-0 because it is Quadwitch after all. So let's keep that in mind, and I hope everyone has an amazing weekend if you're not trading tomorrow. So thank you and take care. Let's jump into these rooms. Check out community.tradeproacademy.com, and we'll see you tomorrow.